All right, ladies and gentlemen, welcome to this deep dive into two perfect, beautiful A+ setups. Okay, we just had two setups during the last 2 weeks on EURJPY, and because these were just perfect, I just wanted to share them with you guys. Okay, when I want to trade smart money, I want to start with a daily chart, with a daily time frame. Because why? Because the strongest and the most solid support and resistance zones can be seen on the daily chart. So first of all, last week, I saw this beautiful head and shoulders pattern. So this was our first shoulder, then the head, then the second shoulder, and then we had a break through this neckline over here, and then we had a retest. What I want to see now, I have established based on the higher time frame that this price might go down, okay? In theory, I already have established a direction of price action. So what I want to look for is I want to look for short sell setups. What I want to see then is right at this zone, right at this area, what I want to see are three things, okay? So this is textbook smart money setup, all right? First of all, I want to see some sort of accumulation phase, lower time frame. Secondly, I want to see a liquidity sweep, or we can also call this a stop hunt, right? Following this liquidity, I want to see a main impulse in the intended direction. Then what I want to see is basically just a correction or a harmonic pattern back to the order block from which that impulse started. That's basically it, guys. So let's just see what happened in the lower time frame. What I had seen here was, first of all, we had some sort of accumulation phase over here in the lower time frame. Okay, at this zone, at this higher time frame resistance zone, in the 5-minute and 1-minute time frame, what I saw was this accumulation phase over here. Okay, accumulation meaning we had equal highs and equal lows. That tells me that retail traders are going to put their positions here. Okay. So retail traders are going to put their sell limits at the zone and their buy stops just above this zone. What I want to see is I want to see liquidity grab. Okay, I want liquidity to be swept, which is exactly what happened here. And then following that, this liquidity sweep over here, what I want to see is I want to see a main impulse. So this was basically the main impulse. Okay, that was the main impulse. And this very last candle over here, this buy to sell candle, is basically my order block. Okay, following that main impulse, what I want to see is I want to see a two-step correction, or we also call this harmonic pattern, back into this order block. My entry is going to be the 0.5 level of this order block, exactly. Okay, the 0.5 level of this order block. My stop loss is going to be above the highs, and then my take profit 1 is going to be my previous low over here. My take profit 2 is going to be my Fibonacci extension of minus 0.27, okay? In this case, because the take profit 1 is already at 10 to 12 risk to reward, I'm just going to close all of my positions over here, okay? That was the setup that we had last week, okay? And this was a perfect setup. What happened then, price actually gave us the move that we were anticipating. So this move, and we could capitalize on that. But then instead of just breaking through to the downside, price actually decided to retest this supply zone again. Okay, so it decided to come higher and then retest this area that we're seeing over here, which was a supply zone or resistance zone. Okay, when I saw this daily candle over here, this for me showed that we got a rejection over this zone. Okay, and we can also, if you just go back, we can see that we had a couple of rejections at this area of interest. So we had a couple of wicks. Whenever we're under this zone, we're rejecting to the downside. Whenever we're above it, we're rejecting to the upside. All right, meaning I can look for the exact setup again. I can just do the exact same thing again. All right, which is exactly what happens. We had an accumulation phase over here. That shows to me that on both sides of this accumulation phase, we have liquidity that is built up. What I want to see a liquidity sweep to the upside, and then a harmonic pattern or a two-step correction back into this order block, which again is exactly what happened over here. Okay, price tapped into the 0.5 level of this order block and then gave us this beautiful move to the downside, and this trade is actually still active. Okay, we could have actually closed all of our positions here at 7, 8, 9 to 1, and then price actually gave us another re-entry, which was this harmonic pattern over here. So we had an order block over here in the even lower time frame in the M15, and then a 2-step or even a 3-step correction back into the order block, and then this was the next move. All right. Okay, that's basically it, guys. Let's just sum it up. So first of all, I want price to, this is actually before the accumulation in the lower time frame, okay? Higher time frame bias. Okay, I want a higher time frame bias. So this either head and shoulders pattern, break and retest the neckline, and then, or the bias could be just support and resistance zone in the daily chart and some sort of rejection from that zone. Okay, this could be an engulfing candle, a daily engulfing candle. This could be just a bearish candle at a resistance zone or a bullish candle at a support zone. Okay, so in the daily charts, I want to see either a head and shoulders pattern and then a break and retest to the neckline, or just simply any retest of any support and resistance zone. Once I do have this, one of these confirmations, I go back to the lower time frame, and then I want to see a harmonic pattern, basically a smart money setup. Accumulation, liquidity sweep, and then the harmonic pattern back into the order block. Okay, my target levels. So my TP1 is going to be my previous high or my previous low, depending on whether I have a short or a long setup. And my TP2 is going to be my minus 0.27 Fibonacci extension of my main impulse. Okay, so this is going to be, that's the main impulse. All right, so if we just take our Fibonacci tool, this is going to be my main impulse, and then my Fibonacci extension is going to be my minus 0.27 Fibonacci extension. Okay, that's going to be my final TP. And then what we could also do is just target the next supply and resistance zone according to the higher time frame. So this could be our swing target level, our third target level. Okay, that's basically it, guys. I hope this helps, and see you in the next one.